This is The Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi, Stroud-Watts in Sydney. Your top stories this hour. Oil plunging as Iran launches a limited missile strike on a US military base in Qatar. Asian stocks are set to track gains on Wall Street. Tehran's attack was telegraphed well in advance, causing no casualties in a largely symbolic show of force that's raised hopes for de-escalation. President Trump deriding Iran's strike as very weak, but also saying he'll urge Israel to work towards peace.
Let's take a look at how U.S. futures are shaping up after stocks managed to clock gains. The optimism surrounding how the economic fallout from these geopolitical risks are going to be relatively contained. We saw U.S. stocks among the groups, almost every sector clock gains save for energy. And indeed, even before all this, it had been quite remarkable how resilient equities had been. Now there's even talk about fresh all-time highs on the S&P 500. We are, of course, seeing how U.S. crude futures, WTI, sinking further below the 68 handle at the moment. Of course, it was very volatile in the session. We saw it in a range of $10 a barrel, now at roughly 2-week lows where crude futures are. And of course, treasuries were also catching a bid overnight, which was interesting to see. Some of this had to do with the dovish Fed commentary that we heard. Now, as I said, President Trump has been raising these hopes of de-escalation in the Middle East conflict after Iran's strike against a U.S. base in Qatar. Trump called the missile barrage very weak and thanked Tehran for signaling it in advance. For more, let's bring in Bloomberg's White House correspondent, Catherine Lucy. Catherine, we're seeing the rhetoric out of Trump, out of the White House, quite a stark contrast, talking about peace, talking about how they've, the Iranians have gotten it out of their system. Distinct from the past couple of days, what is the state of play at the moment?
That's right. What you're seeing from President Trump right now is a real effort to de-escalate. He's talking about peace. You saw his message earlier saying, "Congratulations, world. It's time for peace." So he is clearly trying to signal that he wants to move into a new phase of this. And the officials around him are saying, they see this as, at least for now, a sort of symbolic response. It did not escalate the situation. The U.S. is not currently looking to take additional action. And so I think the way a lot of people around him are thinking about this is similar to, in his first term, the strike on Soleimani, where there was a sort of a similar symbolic response, but the situation did not escalate. And I think that is the hope at the White House now.
So even if we kind of look at this as some sort of more symbolic theatre, if you will, do we have any more intelligence in terms of how effective the US strikes were? Because the evidence seemed to be conflicting in terms of how much damage was actually done to those nuclear capabilities.
Certainly, Trump is speaking a lot about how effective he thinks that these were and saying that these sites were obliterated. We'll have to wait to actually see, I think, more information about just what was hit, what this looks like, and what their nuclear capabilities are after these strikes. So I think we're a little bit away from that right now. There is some conflicting information, and we're just waiting for more details.
Catherine, at the same time, just in the last few seconds or so, we're getting President Trump announcing a 12-hour ceasefire between Iran and Israel. Officially, Iran will start the ceasefire. Upon the 12th hour, Israel will start the ceasefire. President Trump there saying that the Iran-Israel ceasefire will begin in 6 hours' time. So this is sort of exactly what we're talking about in terms of these latest moves kind of choreographed to de-escalate, right? Does this come as a surprise? And I guess from the Israeli side, how, willing to accept an even temporary truce will they be?
I don't think this comes as a huge surprise from the U.S. side. I think this is what President Trump was working towards and hoping for. There was a sense, with people around him that he was frustrated with the talks with Iran before the strike, that they were hopeful that this action over the weekend might propel this forward. And certainly, I think they would point to this as evidence that strategy is working. Obviously, we'll have to see how this all plays out. This is a very volatile situation.
Catherine Nusi there, Bloomberg White House correspondent, with the latest. As we do get the latest crossing the Bloomberg, President Trump saying that there's an agreement to have a ceasefire, a 12-hour ceasefire between Iran and Israel, beginning in 6 hours' time. We're seeing crude oil now slumping more than 5% on the announcement of that tentative ceasefire between Israel and Iran. For more, let's bring in Mona Yacoubian, who's a senior advisor and director for the Middle East program at the Center for Strategic and International Studies. Mona, no one has a crystal ball at this point, but do we think that this ceasefire is a good prelude to a situation like this holding?
It's a great question. I think clearly Iran is interested in de-escalating. We know that, as you noted at the top, by the well-choreographed strikes that they undertook, telegraphed well in advance, not causing any U.S. casualties. We also see President Trump saying it's time for peace. And now this announcement of a temporary ceasefire all suggests that both the U.S. and Iran are looking to de-escalate and perhaps find an off-ramp. Whether it holds and what comes next is still, I think, a big question.
And what comes next kind of goes to the fundamental issues, right, which is the existential threat that Israel sees from Iran, for example. The fact that perhaps all of this has just reinforced Tehran's nuclear ambitions. This isn't going to stop at the sort of this round, right, of conflict, even if this ceasefire does lead to a longer truce.
I think that's right. I mean, we are by no means at the end of this conflict. There are a huge number of X factors out there. You alluded to one, which is the disposition of Iran's nuclear facilities. How significant has the damage been? Were these facilities and the enriched uranium stockpile, were they obliterated? Where is the enriched uranium? Big questions around that. And I think there are questions, certainly from Israel's standpoint, as to has this existential threat indeed been eliminated by virtue of addressing the nuclear infrastructure, or does Israel feel compelled, or is it moving toward a more ambitious set of goals that have to do with regime change in Iran? Those are still, I think, open questions.
How much daylight would you say is there between the U.S. and Israel at the moment?
I mean, I'd be surprised if there was any daylight right now, given the fact that the U.S. really has stepped up in a way, as Prime Minister Netanyahu himself has noted, in a way that no previous president has, to undertake the military strikes that the U.S. did over the weekend. So I would assume that there's little daylight and that Israel is going to cooperate and work with the United States. If President Trump is signaling that he's looking for a ceasefire, I would think that given what the U.S. has just recently done, that Israel will cooperate with that.
Mona, I wonder, I mean, the subtext around whether the ceasefire will hold is how Trump sort of swept into this and playing this mediator role between Iran and Israel. It wouldn't be the first time he's kind of come in to a conflict and declared a ceasefire of sorts. I mean, what would you say are the nuances that we really have to pay attention to here?
Well, I think it's exactly this notion that declaring a ceasefire, implementing it, and frankly moving from, I guess what you could call military gains on the ground into, translating those into political and strategic wins. That's really where the challenge is. And so, declaring a 12-hour ceasefire is one thing. Moving into the negotiations of a deal with Iran that leads to zero enrichment and who knows what else, neutralizing its ballistic missile capabilities, etc., that's quite another. And that's where I think there's a much longer road ahead, with many potential obstacles and X factors and unforeseen developments that could lead us in a very different direction.
Mona, what's your best assessment? And everyone's sort of, guessing and going by satellite imaging and other evidence that we can cobble together. But what's your view in terms of how long it might take Iran to get back on track when it comes to these nuclear capabilities?
I think that's very hard to know. I think the bigger question is, what calculation does Iran make based on everything that has just happened? Does Iran come to the conclusion that based on the strikes first from Israel and then from the United States, that it must, in order to restore deterrence, it must rush toward a nuclear weapons capability? It could come to that conclusion based on what's happened. It's not clear. Again, we're only going to know in the coming days and weeks the extent of the damage. And I guess more importantly, what is Iran's strategic calculus following these past 2 weeks of very intense confrontation, first with Israel and then with Israel and the United States?
What's the risk of regime change, as we've been talking about over the past couple of days? Because obviously the sort of rally around the flag effect might be a bit more muted now that both sides are seen to take a step back. How precarious is the regime right now?
Again, hard to know, not being on the ground, but we are seeing that Israel has expanded the targets that it's going after. For example, today it targeted Evin prison, which is a key symbol of the regime. There have been discussions or certainly rhetoric from Israel that it's looking potentially for regime change or encouraging the Iranian people themselves to rise up against this regime. That being said, I think the dynamics that underlie a regime and its stability are incredibly difficult to discern from a distance. And so it's really hard sitting here in Washington to make an assessment about how stable is the Iranian regime today.
What about when it comes to the stability or the instability in the region? As we know, Iran is just one of the fronts that Israel is now contending with.
Well, I think the region, and particularly Iran's Arab Gulf neighbors, have been alarmed by the instability of the past couple of weeks.
All right, we were just speaking there with Mona Yacoubian, a senior advisor and director for the Middle East program at CSIS, and we're just unpacking these latest developments between Israel and Iran and the extent in which the response from the Iranian side has been pretty muted. That's added to a lot of optimism surrounding the economic fallout and how contained it will eventually be. Certainly, we're seeing that reaction in oil prices as we saw that slump extending on WTI by more than 5%, especially after Trump announced this 12-hour ceasefire between Israel and Iran. Haidi.
Coming up on the Asia trade, Avril, we're going to get more analysis when it comes to the outlook for oil. Vectis Energy Partners markets, of course, reacting to Iran's decision to spare energy assets in its response to US strikes. And now, of course, that live reaction, the continued slump that we see in WTI with the announcement of the ceasefire between Iran and Israel by President Trump. Much more to come. This is Bloomberg.
Continuing to track the conflict between Israel and Iran. And of course, in the past hour, we've seen how Trump has taken to Truth Social and announced this tentative ceasefire between the two sides, Israel and Iran. And he's saying that this will come into effect at about midnight U.S. time on Monday. Against this backdrop, of course, this is following on from the U.S. strikes on Iran and the Iranian retaliation that had been seen to be relatively limited. Again, Trump here announcing this ceasefire on the conflict between Israel and Iran. And certainly, Haidi, we're already seeing that reaction in markets on this.
Yeah, we already saw really oil extending that collapse in pricing, but that's just really playing out even more at the moment. Take a look at what WTI is doing right now. We saw for the August contract falling as much as over 5% in the early part of the Asia trading session. It also continued that plunge through Monday as well. On the other side of the equation, S&P futures are gaining, though. We're seeing upside about 0.3%. Treasury futures looking modestly lower. Dollar yen dipping. We have seen that that sort of talk about perhaps 150 when it comes to dollar yen. Certainly the dollar continued to strengthen against most G10 pairs in the overnight session. Vanda Research, for one, saying it's time to exit those short dollar positions. Let's bring in Garfield Reynolds, who leads our Markets Live coverage here in Asia. We were just talking before we came to air, this idea of, you said kabuki theatre, right? And now it's sort of played out.
Yeah, I mean, it has played out. And of course, there were serious casualties on both sides from the Israel-Iran bombings, but certainly the US attacks, they said there were no casualties, although they have said that it caused damage to Iran's nuclear facilities. Iran's response has caused no casualties, and now everybody can go home after they have beaten their chests at one another to some extent. It's actually eerily similar to late in Trump's last presidency, when there was the attack that killed an Iranian general, and then each side had some responses which were telegraphed. There were some wounded in those. So the aim seems to have been for the US to be able to tie this off with a bow, reassure people that Iran can't get nuclear weapons, and that oil supplies won't be disrupted. So on the face of it, that is going to be the way markets are going to trade it. They're going to take this as a risk explored and now set aside. That signals oil can go significantly lower. If you recall, oil was about $5 a barrel or so lower, if not more. Before all this broke out, it was hovering at multi-year lows because of both increases in supply that were coming from the OPEC Plus group and because of concerns about the global economy. Those concerns about the global economy are going to remain in the wake of this, which has certainly created plenty of disruptions. Again, how do you make concrete decisions about long-term goals when everything can turn on a dime? You were citing that the analysts who are saying it's time to close out those dollar shorts. Looking at what's going on this morning, maybe it wasn't time to close out the dollar shorts. And anyone who had a strong enough hand on the dollar short side to stay in would probably be quite happy with that. Of course, investors would also be well aware that they need to be at least considering what the counterfactuals are. What might lead to, we've got equities rising right now. That all looks, well and good. But now that we have potentially the Middle East no longer a major concern, we do still have the trade war. We are a couple of weeks away from the deadline when the reciprocal tariffs are supposed to come in. Most investors are probably expecting that there will be a delay again. That could indeed be the case, would seem likely, but there could also be some that slip through the cracks. So again, we're left with this very uncertain environment. In the short term, though, equities are likely to climb. Treasuries are also going to do well because the oil price concern is done, and things look a little bit less tense now than they did 24 hours ago, that's for sure.
And Garth, it's also interesting how we're hearing from some of these Fed officials backing the case now that inflation seems to have tapered off a little bit. Maybe the oil price declines also feeds into that narrative, sounding dovish enough to back a July cut.
Yeah, that narrative definitely has become an easier one to sell. We still have some data to come in which could have an impact. The real question for the Fed is, what the broader board, the actual voters, think is needed for them to be reassured that President Trump's tariffs, and remember, the tariffs that have been imposed are still the biggest increase in tariffs in many, many decades. So the calculation is that this will feed through into inflation, that it already has added to inflation expectations. So what are they going to need to see to reassure them that they no longer need to worry about that, and that they instead need to worry, as the couple of Fed speakers overnight said they were worrying, about jobs more than about inflation? That's the question. So we'll see how that plays out. Jay Powell has got 2 days of congressional testimony coming up this week. I'm sure he'll get lots of questions about precisely that. So how he answers those will mean a lot as far as the short-term course for Treasuries is concerned.
Kyle Reynolds, who leads our Markets Live Asia coverage. You can follow more on this story and all the day's trading action on our Markets Live blog. That's on the Bloomberg at MLIV Go. You can get a market rundown in a click. There's also commentary and analysis from our team of expert editors, so you can find out exactly what's affecting your investments at any given point, given how fast this news flow is coming through. More ahead on the Asia trade. This is Bloomberg. Take a look at the extended slump that we continue to see in oil markets at the moment. This is, of course, WTI that we're watching, as we've already seen that slump play out through the Monday session. But we are seeing that extension of the pullback after President Donald Trump announced a tentative ceasefire between Iran and Israel. We saw that decline of just over the past 3 days of now almost 11%, almost more than 5% actually when it comes to the early trading session this morning alone in Asia. It's been a roller coaster session on Monday that ended with some pretty steep losses as well. Price is now well below the level on June 12th, which was the day before Israel launched its attack on Iran. So President Trump saying that Israel and Iran agreeing to a complete and total ceasefire beginning at about midnight New York time, according to that post on Truth Social. We're also seeing reaction across other asset classes, including the bounce in S&P futures at the moment, extending to about 0.5%. Other US futures also trading to the upside. And interesting, that sort of risk proxy of the Aussie has been gaining as well. We had huge option trading volumes with a slide on Monday, but the reversal has been really strong. So it does look like those Aussie bears have been sort of priced out a little bit as we see some uncertainty over that US dollar rally, Avril.
Yeah, we're continuing to track how much of it is a haven play, given that reversal we saw in the Bloomberg dollar index strength in the Monday session. A similar picture, it seems, when it comes to treasuries. We did see catching a bit of a bid in the session following some of the dovish Fed speak, but a bit of a decline based on what treasury futures are pointing to, and this is across the curve. More ahead on the Asia trade. This is Bloomberg.
You're taking a look at live pictures from Tel Aviv at the moment, where it's about 1:30 in the morning in the city. We have had President Donald Trump just announcing that Israel and Iran had agreed to a tentative ceasefire in their conflict that would begin at about midnight US time on Monday. He made that announcement on his Truce Social platform days after ordering airstrikes on Iran's nuclear facilities. He says that the accord had been agreed upon by both countries and referring to this conflict as the 12-day war. No immediate comment from either Israel or Iran from Trump's announcement, but we are seeing that sigh of relief really play out across major markets. Most key, of course, crude markets, Avril.
Yep, we're seeing it playing out across commodities already. That slump overnight following Iran's perceived limited action of retaliation, and then this announcement of the ceasefire and further declines of as much as 5% earlier on WTI, pairing some of those losses at the moment. Gold also slipping, maybe a bit of that reversal of the haven bid. For more on the outlook for oil markets, let's bring in Tamar, Essner, principal at Vectis Energy Partners. Tamar, just as quickly as this geopolitical risk premium was built up in markets in the past 2 weeks or so, it sort of unraveled in the past couple of sessions. I mean, does that surprise you? And what does this tell us about the volatility that both traders and, energy stability, what do we need to watch out for?
Well, it doesn't really surprise me because the rule book has been pretty consistent for a while now, which is that oil prices will shoot up in response to headlines of increasing escalation of tensions, especially between Iran and Israel, the two big powers in the region. And then they will fizzle down when there is any sort of de-escalation, or once the market has come to realize that despite the headlines, no actual oil assets have been damaged in any sustained way. So I think that that's been the clear narrative. Obviously, hopefully with the latest headline of a ceasefire, we could potentially really sort of put an end to this up and down business in oil prices in response to geopolitical headlines. But obviously that remains to be seen depending on how the situation continues to play out between Iran and Israel.
Do you think markets could be underpricing the risks, though? What do you think is an appropriate geopolitical risk premium at this stage?
Well, I mean, it's hard to say because obviously this is a major development in terms of there being a ceasefire between these two countries. As I said, we have to see how that plays out. The interesting thing is that from an oil trader perspective, I think that it's easier in a way to hedge risk through buying insurance and through the options market rather than through outright buying barrels. And to some extent, even prices at current levels still do price in some geopolitical risk, considering that the market fundamentals are otherwise pretty weak, with Chinese demand, U.S. demand probably softening. We are sort of buttressed by the fact that we're in the summertime. There's been strong seasonal demand in the Middle East, heat waves there, heat waves in the U.S. So we need obviously to see how things shake out geopolitically, but there is still some risk premium embedded in prices at these levels.
Tamar, in fact, our MLive blog question of the day is how long before Brent crude drops to $50 a barrel, right? Given that we've seen how quickly geopolitics pushed them up to 80, up from under 60 in April, and how quickly that's been unwound. You've mentioned that China weakness. We're also seeing signs of a slowdown starting to build when it comes to the US economy as well. Do you think $50 is something that we should be watching for in the mid or potentially even near term?
Yes, I mean, obviously weather is a big factor seasonally. We can't overlook that. I don't think I'd want to be shorting oil prices in the summer season. Depending on what materializes from current headlines, if there is a sense that it is permanently defanging this issue of Iran and Israel in terms of making it clear that there will be no threat to the Straits of Hormuz and there's a sense of permanent de-escalation in the region, that could take another, easily $5-10 out of the oil prices. That being said, I wouldn't want to short into a market where seasonally we're expecting to see higher demand, at least for a short-term period in the market. Even though longer term, going into the fourth quarter, I expect prices, from a demand perspective anyway, to soften.
At the moment, we're seeing WTI below the level that we saw just the day before this conflict started. Do you expect to see much sort of strategic reaction from OPEC Plus at this point then?
I think OPEC continues to stay the course. It's been basically their only option. I expect them to continue to add barrels into the market for the August output numbers. We expect another increase of around 400,000 barrels or so. I think that basically they have to do that because there's not really going to be room for them to do that next year, and it's clearly in their interest to monetize those barrels. So I think that stays the same, and that provides further sort of bearishness as we look at the Q4 outlook.
Tamar, I was just kind of alluding to this point in an earlier question, in that the volatility also reminds us perhaps of the need to diversify perhaps, or find alternate supplies. What are you seeing among Asia buyers, for example?
Well, Asian buyers for oil and natural gas are, still heavily dependent on oil from the Middle East, particularly oil that does transit through the Straits of Hormuz. So, they were much more at risk of that being that supply route being affected, much more so than their counterparts in the U.S. and even in Europe to some extent. But yes, increasingly we see that China is trying to diversify their supply routes. And new pipelines are being built, absolutely. But in the short term, very much dependent on supplies from the Middle East. The Chinese have also done an incredible job at really expanding their inventory position. And so what we have found is that basically, even in worst case scenario where Straits of Hormuz was impacted from a transit perspective, the Chinese inventory is so large, not just in terms of number of barrels, but in terms of the diversity of the quality of crude that they had, that Chinese refining production would not be impacted by that. So China has been particularly strategic, not just in trying to diversify sources of supply and sources of egress, but also in terms of their inventory position. And that makes it sort of difficult to gauge what is their true level of demand, because in sometimes they're just able to draw down on inventory, which is what I think that they would do in the event that production from the Middle East was impacted.
Massive stockpiles out of China that have sort of provided a cushion amid the recent market ructions. I just wonder also, what have you been seeing in terms of Russia's flows into China?
Yeah, I mean, continuing. That's been one of the, great, I think, a significant factor in recent developments in the market sort of continuing to fade the geopolitical tensions in the Middle East, is that so many oil bulls got burned following the Russian invasion of Ukraine, when there were expected to be material outages from Russia, and those supplies disruptions really did not materialize. So Russian exports are down a little bit now, but not hugely so. And so I think that that's been also a factor in the market sort of being a little bit more bearish in sentiment regarding recent developments.
Tamar, great to have you with us, particularly to react to these fast-moving developments with the ceasefire being announced by Donald Trump. Tamar Essner, principal at Vectis Energy Partners, as we see that continued downside slump in oil prices. More ahead on the Asia trade, this is Bloomberg.
To some of the headlines we've been getting in the top of the hour from the U.S. president announcing a tentative ceasefire between Israel and Iran. And certainly this is following on from the Iranian retaliatory action looking pretty limited against the U.S. bases in Qatar. Trump certainly taking to Truce Social, congratulating everyone, talking about peace there, and also how this ceasefire would take effect from about U.S. time midnight. Of course, this is something that we haven't really heard from the Israeli or the Iranian sides on confirmation about, but certainly this adds to the optimism about de-escalation and end to the fighting between both sides, Haidi.
That's right, particularly after what appeared to be very choreographed and carefully planned responses from each side. In the meantime, Avril, we've seen Gulf countries such as Qatar, Bahrain and Kuwait reopening their airspace after Iran's missile strike against the US Air Base near Doha. Bloomberg's Paul Allen is with us, and so it's been obviously a very challenging time for airlines, more so even than usual. Are we starting to see a little bit of respite?
A little bit, yeah. The closure around Dubai and Doha was relatively brief, but understandable. Dozens of flights were impacted, at least 10 flights diverted away from Dubai. And Dubai is only 160 kilometres from the south coast of Iran. That's about 100 miles, so the caution is understandable. Doha also briefly closed, services 170 destinations, 500 flights a day. Dubai is the world's busiest hub, nearly 100 airlines, 240 destinations. So even though there's just a few flights affected, so many airlines transit through there that the knock-on effect can be huge. And this creates, obviously, costs in terms of fuel and other delays as well. But it's worth avoiding the risk because there's a long and tragic history of commercial airliners getting shot out of the sky in conflict zones. We had MH17 over Ukraine in 2014, and in this very area back in 1988, it was the US Navy that shot down an Iran Airlines flight, killing 290 people. So a wise precaution to stay away from the area.
Not a great time for an airline IPO?
Not really, no. And it's the Virgin IPO today, and Virgin 25% owned by Qatar Airlines. And it was great timing, not great timing, that brought down Virgin at the end of 2020, around November. The pandemic saw it go into voluntary administration. Bain took over ownership of Virgin. Bain's going to be retaining a 40% stake. Qatar's going to have a 25% stake, and 30% is being offered as an IPO. The pricing, let me see, $2.90 a share. That's about 7 times earnings to June 2025, cheaper than Qantas. But in terms of timing, this has obviously been in the works for about 2 years now, according to the filings papers. So unavoidable, really. Unfortunate, perhaps, but ideally for Virgin, the situation cools down. The ASX is up 15% this year. Qantas has been doing well, so maybe it turns out to be good timing.
Oil prices are on the way down, so perhaps no more concerns about their hedging strategy either. Paul Allen there with the latest, and Avril will be watching that when trading begins for Virgin here in Sydney at noon.
That's right. In the meantime, the latest from the corporate front, China has moved to tighten controls over 2 chemicals that can be used to make fentanyl. The move is seen as an olive branch to the U.S. that may help maintain the fragile trade truce between the two countries. Trade talks this month saw a suspension of the highest U.S. tariffs on China, but a 20% levy tied to fentanyl remains in place. Meantime, we've been told that China has introduced a requirement for state-owned developers to avoid defaulting on publicly issued debt. It's the latest attempt by authorities to contain the nation's prolonged property crisis. The directive may place pressure on management while also sending a signal to banks, often responsible for rolling over loans and issuing new credit. State-owned firms Beijing Capital, China State Construction Engineering and Guangdong Holdings are said to be among bidders for Suez's water assets in China. Sources tell us the 3 firms have been shortlisted and that BlackRock-backed Suez may seek a valuation of more than $2 billion for its Chinese assets. It has more than 40 contracts with local authorities and companies in China. And Starbucks is disputing a report that it's thinking of selling its China business. Tyson Global reported that the company held talks with more than a dozen potential partners, including private equity firms Hillhouse and FountainVest. But Starbucks now says it's not considering a full sale. The brand has struggled in China due to weak consumption and more local competition. Plenty more ahead. This is Bloomberg. Heidi, in this hour, what we've really been tracking is Trump announcing the ceasefire between Iran and Israel, which is quite a remarkable turn of events. Some of our analysts have already highlighted this is similar to previous playbooks, what we've been seeing from the Trump administration back in 2020 when it came to Qasem Soleimani, of course. But it's also really interesting, maybe not to get lost in these headlines. There are a couple of unknowns that have not quite been established as far as to the extent in the U.S. damage when it comes to these Iranian nuclear sites, where Iranian enriched uranium is as well. Some of these questions still lingering when it comes to the conflict.
That's right. A lot of questions lingering as to what next for Iran too, right? Has the risk of regime change been staved off? Has the risk of the nuclear threat really been staved off, given that we don't know if some of those stockpiles had already been moved? There's certainly been no levels of radiation being detected after those attacks. And the question is whether this sort of just emboldens the nuclear ambition for Tehran now that these attacks have happened. Also a big question as to, how much of this perhaps was due to domestic political pressure that we've seen building on President Trump and his supporters as well, given that even within the GOP there has been quite a lot of staunch opposition to any US involvement in this conflict, as well as questions on both sides of the aisle over the presidential war powers and the powers that have been executed in this conflict. But at the moment, there is optimism tracking through these markets. We are seeing upside when it comes to US futures. We're seeing upside when it comes to some of these risk currencies like the Aussie, and that extended slump in WTI as that announcement of a tentative ceasefire between Israel and Iran is expected to kick in at around midnight New York time. But take a look at what we're watching when it comes to US oil stocks. Of course, this has been really another proxy that we've seen some big moves over the past 12 days or so. WTI at the moment is trading already lower than those levels that we've seen prior to this beginning of this conflict 12 days ago. Some of the movers that we've been watching after hours, not too much of a positive reaction. ConocoPhillips, for example, Exxon still down by the tune of almost 2% apiece. But Avril, another sector that's been hard hit has really been aviation and airlines.
Yeah, those concerns about these airlines hedging costs, as well as the uncertainty around some of the airspace closures. And certainly we've been seeing some of these restrictions sort of being lifted when it comes to the airspace in the Gulf areas. But certainly the oil prices declines have been fueling this reversal that we've seen in airline stocks. Looking at some of these U.S. carriers, both Delta and United, in the green in after hours, and perhaps also, Haidi, feeding into the narrative, right? These energy price declines of what the Fed could potentially do. Maybe we're not waiting for September now. Maybe July is on the table.
And of course, even without these geopolitical tensions and conflict, there are concerns about the inflation and growth outlook for the US. The former Fed Vice Chair Richard Clarida says while there is a risk of stagflation in the US, it's unlikely to be as bad as historical shocks like in the 1970s. Clarida, who's the MD and Global Economic Advisor at Pimco, discusses the outlook for inflation amidst these ongoing geopolitical risks.
There's always an element of geopolitical risk in the world. You really can't go into the bunker and hide from it. You just have to adapt to it. And I think this is an example of that. Markets will try to look through and assess the fundamentals. I don't think you can get too caught up in the day-to-day volatility in times like this.
But do you worry? I mean, do you support? The Fed has an idea that actually in the third quarter inflation is going to pick up. But there's always this mismatch between the surveys and actually translating into the real data. Will it come to fruition?
We really don't know. So far, year to date, the inflation data in the U.S. has been coming in better than expected. Indeed, as of May, essentially inflation is running at the Fed's target. And so the Fed keeps waiting for the tariff impact to show up in inflation. That's in their forecast. That's in most other forecasts. But I think, honestly, we have to admit so far the U.S. inflation data has been coming in pretty favorably. Yeah.
Does that, the big worry is, of course, stagflation.
Yeah.
Right. We don't even pronounce it on a Monday morning in case something comes back. Do you worry about stagflation in the U.S.?
I think it's a risk. Now, if we do get a stagflation, it's not going to be the bad old days of the 70s with 10% inflation and bell bottoms and 12% unemployment, but we'll have potentially a whiff of stagflation. Governor Waller recently of the Fed has indicated that he's prepared, and probably others on the committee, to really look through that if the economy's underlying fundamentals look sound. So an interesting next couple of meetings for the Fed, I think.
Pimco Managing Director and former Fed Vice Chair Richard Clarida speaking with Bloomberg's Francine Lacroix. And as we've been telling you about this U.S. declaration of a ceasefire between Israel and Iran, that's really helping U.S. stock futures to extend some of the gains overnight, where, of course, we saw pretty much every sector in the green save for energy. And might this then add to the narrative, right, that stock market participants were right to sort of underprice the risk when it came to the geopolitical fallout between Israel and Iran? We are not far from these fresh all-time highs. There's been a lot of chatter about the extension of these stock market gains. I think we're at 60-25 when it comes to the S&P 500. Taking a look at the currency space as well, where the yen in the past couple of sessions has lost a lot of ground against the greenback as this dollar safe haven bid sort of crept back in. But suddenly we're seeing that reversal of that. Going to be watching out for what we're seeing in dollar China as well. That's been slipping in the past couple of sessions. Haidi.
Avril, and of course we're watching crude oil very closely. This is a 7-day sort of trading picture, and in fact we're now seeing prices back to pre-Iran-Israel conflict levels now. It was a roller coaster ride in that Monday session that ultimately ended with steep losses that are now being extended with that decline of over 5% in the early part of the Asian session. So a market that's being rocked by the crisis in the Middle East, but we have seen that pullback, particularly with the announcement of the ceasefire. This is Bloomberg.
This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Oil prices extending their slide as President Trump announces a tentative ceasefire between Iran and Israel. It follows Tehran's limited retaliatory strike on a U.S. base in Qatar. Trump posting on social media that the truce will begin about midnight U.S. time, ending what he calls the 12-day war. Also ahead, Asian stocks set to extend Wall Street gains as yields drop. Fed Governor Michelle Bowman saying that a rate cut could come as soon as July.
And I'm Stephen Engel in Tianjin, China, where the World Economic Forum annual meeting of new champions is getting underway today. We'll be speaking to guests, obviously, about the situation in the Middle East, plus the ongoing trade and tech tensions between the U.S. and China, the two biggest economies in the world.
Ahead of that, let's take a look at how our markets are shaping up. Of course, it's this optimism about de-escalation between Israel and Iran following what Tehran did, striking U.S. bases in Qatar, and the U.S. president now talking about a ceasefire between both sides. Of course, we haven't heard from either the Israelis or the Iranians, but that ceasefire, Trump says, set to take effect at 12 midnight U.S. time. We're seeing that fueling the stock markets. Already we saw a 1% gain on the S&P 500 overnight. That extension continues on this talk about a ceasefire. Treasury bond futures are down. U.S. crude futures are also extending the declines from the session overnight, Haidi.
Yeah, take a look at how we're setting up when it comes to just that start of the staggered session here in Australia, but also, of course, going into the start of trading across other major markets, including Japan as well. We are looking like quite a bit of upside when it comes to Sydney futures once they come online in the next hour. Chicago Nikkei futures also up by about 0.6%. Dollar yen is an interesting one. We were just talking in the last hour at the prospect of 150 as what we're watching at. 145.97 is what we're tracking for dollar yen at the moment. That sort of perhaps resumption of a dollar slump is playing out across a number of these trading pairs, particularly when it comes to trading in euro dollar. Pretty big statements pushing towards this year's peak, reversing those sort of conflict-driven losses that we've seen. Dollar China also on track for a third, possibly a fourth day now of gains when it comes to upside for the Chinese yuan. Well, President Trump has announced that ceasefire agreement between Israel and Iran, saying will end its 12 days of war. He says the truce is scheduled to take effect in about 5 hours' time. For more, Bloomberg editor John Haidi joins us in Washington. And John, there was a lot of sort of speculation as to where this was headed, given the traded attacks between the US and Iran were seen as being very well choreographed, if you will, and calculated, as well as being well telegraphed. So in this sense, I guess, is the ceasefire surprising? The bigger question is, will it hold?
Those are two excellent questions. The announcement did come a bit abruptly in Washington time this evening. And as you point out, it occurred hours after this Iranian strike on Qatar, on an American base there, that seemed to be planned to cause as few casualties and damage as possible. President Trump, even thanked the Iranians for providing advance word of this. Now, a lot of questions remain unanswered. Will it hold? Even as after the president's announcement, and not that just a few minutes ago, there were reports of explosions in Tehran as Israeli attacks on Iran apparently continue. This conflict has been very intense over these last many days, and preceding it, the prelude was simmering hostilities over decades between Israel and Iran. Now, those aren't just going to go away. Also, unanswered is what is the status of Iran's nuclear program, which prompted Israel's airstrikes in the first place.
John, to your point about how Israeli strikes sort of still continue on Iran, what is your sense of whether we can get any buy-in from both the Iranian or the Israeli sides, or at least on a rhetoric sort of basis?
Again, there has been no comment so far from either Tehran or Jerusalem. So this is all, a great deal has to be worked out. I mean, a war can begin, but it's sometimes much more difficult for it to end. A lot of things have to be done. Apparently, Vice President J.D. Vance said that President Trump spent much of Monday working the phones. He didn't say exactly with who, but to try to reach some sort of accord here. And that seems to have been accomplished. How it goes going forward, how it proceeds going forward, we'll just have to see in the coming days.
Bloomberg editor John Haidi. Let's bring Mike Keith here in Sydney for more on the latest. And it's sort of very fast and furious, the way that this has happened, right? And I guess you've got to wonder what some of the domestic pressures that were playing into how President Trump has handled all of this. But I do wonder from, the Middle East side, we haven't heard from either Iran or Israel. We know that Israel believes that it's facing an existential threat. What does that mean going forward?
Well, I mean, it's the one thing I guess we'd see is that Iran had said that it wouldn't negotiate it was under fire. So I guess that presuming that Trump wouldn't announce this without Israel and Iran having agreed to it, it does open the door then to potentially talks to begin. But where we go from here, I mean, what we've sort of seen is that Iran is a pretty aggressive regime, but when it's backed into a corner, it does tend to turn towards pragmatism, basically. And we saw this with their retaliation on Qatar. I mean, it was telegraphed ahead. The US was able to evacuate its personnel. Some have even suggested that Qatar even agreed to this happening as a way to just minimise any sort of fallout from the attack. But exactly as was mentioned just before, the question of the status of Iran's nuclear program is really what everyone's curious about. I mean, we've got this quite large amount of highly enriched uranium that no one really knows where that is, or if they do, no one has said so. So, yeah, there's a lot of balls still in the air here. But nonetheless, I mean, just Qatar's showing offering of an off ramp. The ceasefire, the temporary ceasefire, etc. That's all sort of fairly positive, I think.
Mike, what's your sense of what Israel, what the ultimate goal is here? I mean, are we still looking at potential for regime change in Iran?
Yeah, Avril, I think there's no question Israel would really like to see a different regime in Iran. I mean, it's gone from one extreme to the other. If we go back 50 years, nearly 50 years to the Shah, it was Israel's, one of its great friends, or only real friends in the region, and then under the mullahs, it's become this implacable enemy, and as Haidi mentioned, as an existential threat to Israel. So. We just sort of going to have to wait and see how it all goes there. But that question of Iran having a nuclear weapon is sort of going to remain at the forefront. I mean, presumably, as I mentioned, that they with Iran sort of being backed into sort of a more pragmatic stage, this show of force, it sort of suggests that perhaps an agreement might be in the offing. The Iranians now know that Israel certainly means business, and the US is prepared to back it. So. We may actually be in a reasonably good spot here going forward.
Conversely, does it also give Iran a bit of time to regroup, right? If the nuclear ambitions are, still present, perhaps even heightened, does it also perhaps give the proxies some time to recover?
Look, they've been under siege, haven't they? I mean, basically since Hamas's attack in October 2023, what we've seen is a rolling up of all of Iran's, sort of forward, proxies or groups, etc. It's forward defences, and we've seen it with Hezbollah not being able to do anything towards Israel, even as it's, the country that's overseen it has been under fire. So yes, it certainly does, and it's hard to see that Iran would give anything up. I mean, the best example probably is North Korea, which just accelerated towards a nuclear program, and the moment you have that bomb, you're basically untouchable now. No one is going to risk attacking a nuclear state and the potential for a retaliatory nuclear strike. It's just too dangerous. So the temptation for Iran to try to accelerate this will be very, very high, and that's exactly what Israel will be trying to head off, and the US as well.
Mike, I just wonder also, I mean, one of our earlier guests was talking about how difficult it kind of is to predict how things play out in Iran, just because, there's no presence there at the moment. But when it comes to the leadership, do you see that sort of rift developing? Or, when it comes to the regime, what is the narrative that's being pushed forth here?
Yeah, I mean, look, as sort of referring to your earlier question, I mean, Israel no doubt would have liked regime change. The US is sort of, I think everyone would like regime change there, but we saw with Iraq, in 2003 that when you've had a repressive regime and suddenly all that's lifted, and particularly in countries that are multi-ethnic and have all these various groups that have been repressed and then are suddenly striving for power because you have a vacuum here, it's generally a recipe for civil war. And do you really want that happening in a heavily armed country, or is it easier to deal with the devil you know? And they're the sort of questions. But Iran, my sense always was that Iran was only going to retaliate really heavily on the US or and attack US personnel and bases if it felt this was the end game, that the regime wasn't going to survive. The fact that they've taken this off-ramp suggests they're reasonably confident that they will stay in power. They have a lot of very strong security apparatus at this stage. But then again, these things can happen overnight. You only need to look at Syria and how Bashar al-Assad suddenly was gone, in the blink of an eye. So, yeah, I mean, it seems that they're probably pretty much okay, but, everyone would no doubt like to see a change as long as it could be done peacefully, but that's highly unlikely, unfortunately.
Political survival has been the game for Netanyahu too, right? Even just last week, just a day or so before all of this began, his kind of political leadership was wobbling. There was a vote to try and dissolve the parliament. So how much does this strategy, when it comes to how it deals with Israel's enemies, play into the fact that he can hang on to power?
It's a very good question, Heidi. And of course, if you read the liberal press in Israel, they argue that it's a 50-50 thing. That okay, it's good for the country what's going on here, and no one can doubt the skills of Israel's intelligence services and its military. They're amazing, but it does benefit Netanyahu. A country at war is a country that must unite around its leadership, and you can't go and topple a government in that state. So certainly the case of him dragging on things with Gaza, he has these very, very extreme members in his cabinet who do threaten to topple it, etc. And I think there's an element of them, this Gaza war dragging on, of his political survival involved in that. I don't think there's much doubt about that. With Iran, they're much bigger stakes here and much more dangerous for Israel as well. So I suspect that the option was there, the opportunity was there. He'd been given the green light by Trump, and that's why they went ahead with Iran. When it comes to the Palestinians, it's a different ballgame, and I think what you're alluding to there is much more in play.
Bloomberg editor Michael Heath there. Let's take a look at the market reaction, which of course has been sort of pricing in a de-escalation in some ways in some time, but that's clearly really taken flight as we've seen the ceasefire being announced by Donald Trump. Let's bring in Kyle Rodda, who's a senior market analyst at Capital.com. So, investors, when it comes to risk assets, have kind of stayed the course over the past few sessions, and now we've had the ceasefire announcement. Does this mean pretty smooth sailing going forward?
Well, more or less. I mean, I think the market's really sort of concerned about four things primarily, which was a conflict that was going to broaden out, that a conflict that would potentially lead to Western leadership, of course Israel, but broader Western leadership calling for regime change, anything that would result in obviously some sort of blockade in the Strait of Hormuz, or on top of that, obviously the United States, whose intervention becomes more than just airstrikes. It would seem that those worst case scenarios have now been more or less circumvented, and that the markets can kind of look through this dynamic as long as it does remain fairly localized, and we don't see a significant risk to global energy supply, which could be another supply shock. So the markets have kind of taken this in stride. Obviously, the move really started to happen at the Asian Open yesterday morning, and following the strikes on the US bases in Qatar, it really does seem that all the indications are that both sides are now looking to de-escalate, that there's that sort of ceasefire on the cards, and that this might be something that markets will start to look through, provided, again, those kind of four key risks or four key parameters aren't violated, if you will.
So does that mean we can now turn back to the bread and butter? Of course, there's still the expiry of the trade truce, that risk there, and central bank risk.
Yeah, we could argue, bread and butter might be, central bank risk perhaps, and earnings risks, and that would be, where everyone would prefer their attention to be at the moment. But of course, we do have that kind of trade policy spectre hanging over the markets, and I suspect now that, from a narrative point of view, it's really going to go back to, well, where are these, 90-plus trade deals that the Trump administration have touted that are, more or less on the cusp of being agreed to, and whereas the sort of permanent détente when it comes to, tariffs and, what will ultimately and hopefully be for market participants a level of tariffs that, albeit much higher than what it was before the Trump administration took power for the second time, significantly lower than Liberation Day. So, I mean, the markets are ideally going to be focusing on earnings as they're coming up, and maybe to a lesser extent, interest rate policy. But I think, really the next thing, if we're going to see the markets continue to climb that sort of proverbial wall of worry, some breakthroughs on trade now, considering geopolitical risk, while still a significant tail risk, is sort of diminishing as an area of focus.
Given how we've seen oil prices decline, though, how much does that help feed into the narrative of inflation edging off, and potentially we see a cut sooner than September from the Fed?
Well, I don't think really it was feeding too much yet into monetary policy expectations just yet. I think what was really the potential risk there is that, we're obviously living in a world of supply shocks now, and that we've had, a potential supply shock in the works for the last 6 months because of US trade policy, and that geopolitics was going to become another supply shock. And of course, the nature of negative supply shocks is that they're stagflationary. And so I don't think the markets had really come to the position yet where it was pricing in a world where interest rates would have had to have been higher materially than they would have otherwise been, and growth materially lower than what it would otherwise be. But nevertheless, there is still the outstanding question here of, an appropriate pricing of inflation risk, and therefore interest rate settings going forward as well. And there's a really wide distribution of risk that market participants are looking at. You can kind of actually tell even more so to the point, the way policymakers are looking at that in terms of sort of the distribution of estimates from the dot plots last week. So, I mean, that's just kind of an unanswered question. And it sort of goes back to that first point that we sort of pivot back to trade policy now, because one of the big questions is what is the ultimate level of tariffs? What is the impact of tariffs going to be on inflation, which has not shown up just yet, and how do policymakers respond? And all of those things come down to trade policy and the Trump administration's, sometimes it feels like whims, and we simply just don't know that for sure yet.
What about when it comes to the BOJ? I mean, quite a divergent path from global central banks, but in its job in trying to normalize, I mean, the yen is one of your top conviction calls. What is feeding into that?
That effectively the Bank of Japan will have to tighten policy once again and sort of find itself more or less backed into a corner and lift interest rates to tame inflation. I mean, the currency is almost a little bit of a canary in the coal mine in some respects, that the markets are expecting now that, although there was that kind of dysfunction going on in the JGB market, which I think was probably more about indigestion as markets were trying to absorb that sort of additional bond supply after obviously years of that kind of backstop from that sort of central bank bid. Ultimately it was a market discounting sort of structurally higher interest rates that real rates were still very, very negative, and therefore policy was rather loose. So now that we've got this kind of potential negative feedback loop, that if the yen continues to depreciate, it will complicate that inflation tackling job of the Bank of Japan. Eventually, it's going to have to lift interest rates, tighten policy once again. All of this in an environment too that in the world pretty much at the moment is going through a sort of a synchronized slowdown, at least at the margin. So I still think that basically the Bank of Japan will have to tighten policy, sort of stop being so cautious and wait and see and do something about inflation that is clearly above target, and that's going to manifest eventually in a yen. Again, domestic and international factors that will lead to an appreciating yen.
Kyle, great to chat. Thanks so much for your analysis. Kyle Rodda of Capital.com. More ahead on the Asia trade. This is Bloomberg.
This is the picture as we wait for more details of this tentative ceasefire that has been agreed between Iran and Israel being announced by President Trump. We are just getting a line crossing the Bloomberg, according to Reuters, that Iran has agreed to the U.S. proposed ceasefire, according to one Iranian official. Up to this point, we hadn't actually heard that reaction from either Iran or the Israeli side as well. But that ceasefire is expected to kick in at around midnight U.S. or New York time, I should say. Broadly, Avril, markets taking this as a positive.
Yeah, we already saw that risk on, and perhaps what we're hearing from these Iranian officials could be feeding into the optimism surrounding the longevity of the ceasefire. But some other stories that we're following: Dubai says it has resumed full operations at its airports following a precautionary pause. Kuwait and Bahrain also say they reopened their airspace after a temporary closure. Global airlines earlier suspended some flights or diverted them to safer airports due to the conflict between Iran and Israel. Meantime, China has moved to tighten controls over two chemicals that can be used to make fentanyl. The move is seen as an olive branch to the U.S. that may help maintain the fragile trade truce between the two countries. Trade talks this month saw a suspension of the highest U.S. tariffs on China, but a 20% levy tied to fentanyl remains in place. The Supreme Court has lifted a judge's order requiring the government to give people 10 days notice before they are deported to a third country. It's a win for President Trump, whose administration argued that a Massachusetts court usurped presidential authority. The case stems from a lawsuit in March by immigrants who feared being removed to countries not identified in their deportation orders. More ahead on the Asia trade. This is Bloomberg.
Take a look at some of the corporate headlines that we're following this hour, and Starbucks is disputing a report that it's thinking of selling its China business. Casein Global reported that the company held talks with over a dozen potential partners, including private equity firms Hillhouse and FountainVest. But Starbucks now says it's not considering a full sale. The brand has struggled in China due to weak consumption and local competition. Tesla shares posted their best gain since April after the launch of its long-awaited driverless taxi service. A select group of retail investors and social media influencers were invited as the first riders, live streaming their trips in Austin, Texas. Some of the robo-taxis appeared to break traffic laws in the videos, but the city of Austin says it hasn't received any reports of safety problems. More to come here on the Asia Trade. This is Bloomberg. It's that time of year. The World Economic Forum's annual meeting of the new champions, often known as Summer Davos, kicks off today in the Chinese city of Tianjin. Our chief North Asia correspondent Stephen Engel joins us live from there. Steve.
Yeah, there's no shortage of topics, obviously, to talk at the World Economic Forum annual gathering of new champions, otherwise known colloquially here as the Summer Davos. Of course, we are going to be monitoring very closely the developments over the last 48 hours in the Middle East. Is this a true de-escalation, an off-ramp, as they're calling it? And what has China's response been, and what will it be going forward? They strongly condemned it in a 4-sentence statement coming from the Ministry of Foreign Affairs on Sunday. Fairly quiet since, but obviously China has a lot at stake on whether the Strait of Hormuz is closed. About a third of its oil imports pass through that narrow waterway, and it buys about 90% of Iran's oil exports. So clearly, China has a vested interest in the situation. But again, things seem to be cooling down a little bit. We'll be talking to a number of different economists who are joining the World Economic Forum later this morning. At least 3 noted economists will be joining us to get their perspectives on whether this is a lasting off-ramp or whether the oil shock and the higher prices are something that we definitely need to be watching for the global economy going forward. Haidi?
Yeah, I was just going to ask you, Stephen, what else are we expecting out of some of the interviews today? You talk about how there will be conversations with these economists.
Yeah, absolutely. I mean, the 3D economy here, right? The 3 stresses are going to be top of mind of many people. That is, of course, debt, deflation, demographics, and not to mention you can add a 4D, Donald Trump, and also diplomacy, a 5th D. There's lots of things to talk about this struggling economy, obviously, in face of those tariffs. Keep in mind, mid-August is the deadline imposed by Donald Trump and the White House for China and the United States to strike a lasting trade truce. Also coming up in a relatively shorter amount of time, on July 9th is the deadline for reciprocal tariff pause to expire for the rest of the world. Clearly, that's going to be something we're going to be discussing on the panel that I'll be moderating tomorrow, that will have the president of Ecuador, Mr. Noboa, on my panel, as well as the deputy managing director of the IMF, that's Li Bo, will be on my panel tomorrow. So it'll be a busy couple of days.
Steve, looking forward to all of that. Thanks so much for bringing us a preview. Our chief North Asia correspondent, Stephen Engel in Tianjin, China. And from lasting trade truce to potentially a lasting ceasefire. Certainly there's a lot of optimism about the de-escalation of the conflict in the Middle East between Israel and Iran, seeing here a really pronounced move to the upside when it comes to stock market futures, and that seems to be trickling through into the Japanese futures as well. Oil is down. The safe havens are also losing some of that earlier safe haven bid, seeing the greenback strength that we've been seeing eroding a little. For more on the developments in the Middle East, let's bring in Rachel Brandenburg. She is Managing Director and Senior Fellow at Israel Policy Forum Washington, and has previously worked at the U.S. State Department and the Department of Defense. Rachel, first off, we're hearing about this announcement of a ceasefire. Some reporting that the Iranian officials had weighed into that, but still that the Israelis intercepted strikes from the Iranian side. I mean, what are the considerations for both sides, and what is your sense of how lasting any ceasefire would be?
Sure. Thanks so much for having me. I think, this is very much an evolving situation. Within moments of President Trump announcing a ceasefire, there was reporting that the Iranian officials saying that there was not a ceasefire yet. And since I have seen some reporting that Iranian officials are confirming a ceasefire, regardless of whether it's happening or not, at least according to President Trump, it wasn't to take effect for another 6 hours. So he's basically saying, have at it for the night, finish whatever operations you're in the middle of, and then let's talk in the morning. I think we've seen consistently that President Trump has wanted to come back to the negotiating table. For some time, the Iranians have wanted to come back to the negotiating table. I think the question will be, does Israel feel that it's achieved enough in its military operational objectives to take at least a pause and see if the rest of Iran's nuclear capabilities can be dealt with through diplomacy instead of continuing to strike various military and nuclear targets.
What are the considerations for Israel, though? I mean, we were talking to some of our guests earlier that, very clearly regime change could still be on the cards. But what is your assessment of the state of play?
I think thus far, the Israelis have been focused on degrading Iran's nuclear program and its ballistic missile program. There certainly has been conversation also about, does this slip into regime change? There is a risk that, particularly amidst what has been fairly successful military operations, the Israelis decide that this is not enough, and they need to continue striking Iran. The targets become more politically oriented, and we start seeing a set of objectives that look more like regime change. There's a significant risk for Israel and for Prime Minister Netanyahu in doing this, though. He said yesterday that he does not want to see a war of attrition. They're committed to achieving their military objectives, and then will stop the war. The amount of pain that Israelis have sustained over the past 11 days of war is significant. I think, interestingly, there is both tremendous support for this war because Iran has been behind so much of the proxy war, the attacks, and for decades at this point, the Israelis have been primed for having to go after Iran at some point militarily. So while there is support for the war and support for what has been deemed so far military success, there also is a lot more destruction, more deaths, more building destroyed, more injuries than the Israelis have experienced in a very long time. The economy has basically come to a halt. People aren't allowed to leave. Flights are stopped. So I think there's a limit to how long this can be sustained. In addition to, if I'm Prime Minister Netanyahu, I want to end with a win. And thus far, I think if the operations come to a close soon, it can be deemed a victory. If it goes on for a while, the window for this to be a win may close.
I was going to ask, can you make a comparison to how protracted the conflict in Gaza has been, as a point of comparison, right? And I guess if you can claim this as a symbolic victory, what does it mean if you follow the narrative that this sort of emboldens the nuclear ambitions or, the convictions for Tehran even more? What does that mean for, whatever the next step is for Israel?
Sure. I think nobody should assume that the nuclear program or Iran's nuclear ambitions comes to a halt just because their military program their military capabilities have been degraded thus far. The next phase to actually prevent them from having the ability to build a nuclear weapon needs to be a negotiation. But you can't bomb into submission the knowledge that they have about nuclear fuel cycles, the capabilities to build a weapon. You can disrupt the process, but nothing suggests that their ability to weaponize if they wanted to is completely degraded at this point. Even the enriched uranium stocks, which have allegedly been moved out of the facilities, nobody really knows where all of them are. That's going to be very difficult to find and relatively impossible to just strike into submission. So there has to be a diplomatic component to actually commit the Iranians to not moving forward with turning their nuclear program into a nuclear weapons program. I think Gaza is sort of a different story. Gaza started as a war of self-defense. Prime Minister Netanyahu, or not defense, a defense against October 7th. Prime Minister Netanyahu set out a relatively unattainable objective early on of total victory of getting rid of Hamas entirely. And there are elements of the Israeli government who would like to see Israel resettle Gaza. There are no such territorial ambitions in Iran. There is very discrete military objectives. I'm sure there are those who would like to see the regime changed, but ultimately they're after a set of objectives in Iran that are finite, and there really weren't such a finite set of objectives in Gaza. Gaza is also Israel's neighbor. They're effectively part of the same territory. It's a very small land. So the ramifications of success, failure, the amount of total destruction in Gaza has far more direct implications for Israel and Israelis than Iran, which is still quite a bit farther away.
How important are the security, military, strategic goals that we've seen from Israel since October 7th? How important is that to political survival for the Netanyahu government?
This is certainly icing on the cake for Prime Minister Netanyahu, who is facing tremendous pressure to end the Gaza war. A couple weeks ago, polling reflected that over 70% of Israelis wanted to see the war in Gaza come to an end and the hostages brought home. This gives him sort of another wind, another life. If you think of his political life as having multiple lives, here's another one where if the war ends soon, I think he'll come out on top. He was facing coalition challenges just before the war started. That acute risk to the coalition wrapped up just before the operation started, but this certainly will give him a boost politically. There also are elections at some point, if not in November 2026 beforehand. And if Prime Minister Netanyahu feels that he's achieved enough of a victory with the war against Iran, and he wants to be able to end the war in Gaza and sort of move Israel on from having this multi-front war, we could see him call for elections. We could see him make decisions that would dissolve his current cabinet, but call for elections on the assumption that he has regained enough popularity that he would be able to win with a different government. But Prime Minister Netanyahu has proven extremely adept at surviving politically. He determines what needs to be done minute to minute, and I think how this war ends will have a lot to do with what he decides is the best next step for his own survival.
Rachel, really great to have you with us. Rachel Brandenburg, Managing Director at Senior Fellow at Israel Policy Forum, Washington. Take a look at what we're watching when it comes to some of these key commodities. Of course, primarily watching these energy markets continuing that pullback. The slump really began in the Monday session. It was a pretty rocky session that ultimately ended with some steep losses, and that's really just continued to the tune of another slump of about 6% or so after President Trump announced that tentative ceasefire between Iran and Israel. Let's bring in now Ashish Asithia, who leads our BNEF coverage of commodities, energy and environmental markets. So, Ashish, as we see in the price action, the lowering of the risk premium for crude just continues to play out.
Yeah, that's absolutely true. In fact, if we look at how prices increased since the start of the conflict, they surged by almost $15 per barrel, and today they are, down significantly after the announcements from the president. But if you compare where price ended today evening to the range it traded between mid-May and mid-June, we are still $5 to $6 per barrel higher. So there is potential room for further reduction if the market believes this conflict is well and truly over. And then we are back to basics in the oil markets, where lower demand growth estimates from emerging markets like China and India, as well as potential rise in production from OPEC take center stage.
What else is taking center stage? I mean, there seems to be a focus on, because of the conflict, the need for these alternate routes for oil and gas producers outside of the Strait of Hormuz.
That's absolutely true. If you look at how much oil went through the Strait of Hormuz last year, it was roughly 16.5 million barrels per day of crude oil and condensates. There is some domestic pipeline capacity both in Saudi Arabia and UAE to move crude to different shores and then export them to markets in Asia as well as in Europe and avoid the strait. But the incremental capacity on those pipelines right now is roughly around 2 to 3 million barrels per day. So If, for whatever reason, the conflict would have escalated sharply from here on, we would have seen a lot of price action in the market.
It would have also really endangered the promise of low energy prices for President Trump, right? He's called for quickly raising U.S. production. How feasible is that?
That's an interesting question. We think that U.S. oil producers in today's environment listen more to their shareholders than any administration in the White House. And if you look at the commitment to investors that they have made on the last few earnings seasons, they were targeting very modest production growth on average of around 2 to 3%. And the only way they would have changed that strategy and significantly upped production would be to actually see significantly high oil prices for a significant period of time, say 6 to 9 months. And if that's not happening, I don't think they're coming back to a situation of much higher production growth.
Ashish, what about when it comes to Asian buyers such as China and India? They've sort of gone ahead and made these contingency plans. We've seen China stockpiling. But what happens if, the ceasefire does not hold? We see further disruptions in the oil markets.
So I think China and India and other Asian buyers are at least slightly better prepared to handle global conflicts than they were when the Russia-Ukraine war started. Both China and India have invested in maintaining strategic petroleum reserves, which could last anywhere between a few weeks to a few months. And there's some buffer to draw down from. The other thing to remember is that with the global reorganization of oil flows post the Russia-Ukraine war, China and India in particular import a lot of crude oil from both the Middle East as well as Russia, convert them to products like gasoline and diesel, and send them out to export markets like Europe. And if the need arose, they would probably keep some of that volume in the domestic market rather than exporting them. So there are various ways in which they have tried to adapt to global conflicts.
Ashish, thank you so much. Really appreciate it. Ashish Setia, who leads BNEF's coverage of commodities, energy, and environmental markets. More ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching when it comes to Japan assets, and certainly the declaration of this ceasefire to kick in at around midnight New York time between Iran and Israel makes things a little bit more challenging when it comes to the outlook for today's 20-year JGB auction. The sort of haven bid that we saw, perhaps diminished as it already was for Japanese bonds, may be fading even further. Now we're starting to go back potentially to that negative fundamental outlook for JGBs, given rising stagflation concerns. We're seeing futures looking a bit soft for that Tuesday session. We're also watching, of course, trading across some of the FX pairs as well, and the sort of fade that we see in dollar yen there is at play as well, given that broader kind of reversal of the tentative rebound over the past few sessions that we've seen for the US dollar. At the moment, though, we are seeing a pretty upbeat look at the start of the equities trading session in the next hour, in fact, in about 10 minutes' time. Well, Japan's finance ministry will be reducing the issuance of super long bonds as a step to calm a bond market rattled by recent surges in yields. Let's bring Garth Reynolds, who leads our Markets Live Asia coverage. So, Garth, the declaration of this ceasefire certainly removes, I guess, what tentative appeal there might have been when it comes to today's auction.
Yes, it does. On the other hand, it also, the reduction in oil prices removes a strong inflation driver for Japan, which is a major oil importer. So that's a bit of a help, but the bigger concern is precisely, why would you go into 20-year Japanese government bonds in particular? That's not, it's not a tenor that's been particularly attractive in recent times. So the risks on balance are greater going in there, as we can see from the weakness in futures. It's also been noticeable that Treasury futures have been little changed in the middle of strong moves down for oil prices and up for equities. And that's the whole problem. You've got a risk on environment. So even while lower oil prices are kind of a good thing for government bonds in general. The strong bid for stocks means that, nobody's going to be rushing into government bonds right now. That raises the dangers for Japan. The better news is that even if there is a bad 20-year JGB auction, we might not get the sort of read across to other government bonds that we got last month when there was a very poor 20-year auction for Japan that helped to generate some angst across global bonds, and then we saw a poor 20-year auction in the US as well.
Garth, even as we watch out for this 20-year auction and hope it wasn't as disastrous as last month's, a lot of the, maybe slight resilience we might see today, maybe from Japan's plan to reduce issuance on the long end. But what are you seeing in terms of the imbalances, given what we're seeing on the short end on the issuance plan?
Well, Japan has a very difficult path towards maintaining bond market stability because, on the one hand, the BOJ is moving, however slowly, to try and normalize policy. That means it needs to stop buying so many government bonds. It owns more than half the market, though, so that creates tensions. And at the same time, we've got a government who is looking to boost spending. That's partly linked to a lack of popularity. And if they're going to be boosting spending, well, they need to boost issuance, but they can't boost issuance at the long end because the long end just can't absorb it. So, as you say, that pushes them towards the short end, where maybe it's easier to absorb, at least for now, but ultimately the whole situation risks being a whack-a-mole setup, because each time they pat down one area, another problem crops up. When it comes to the short end, it's okay now, but if the BOJ is going to move to raise interest rates, which it has been saying it will do, provided the economy behaves the way they've been forecasting it will, well, then that puts the short end at risk. And if they don't raise short-end interest rates, then that puts the yen at risk, which is another difficulty both for the BOJ and for the government, which really doesn't want to see the yen get to 150 or weaker.
Garfield Reynolds, who leads our Markets Live Asia coverage here as we look ahead to these market reactions as we continue to count down to that tentative ceasefire to kick in at midnight New York time. More ahead. This is Bloomberg.
You're watching the Asia Trade, and of course we've been bringing you the latest on Trump's announcement of a ceasefire between Israel and Iran, which kicks in a few hours from now, according to the US president. In the meantime, we are hearing from Iranian media about powerful explosions in parts of western central Tehran and Karaj as well. And of course, overnight we saw oil prices slumping, extending into the session today as well. In the meantime, keeping a close watch on some of these Asian energy stocks that have been gaining ground in the past week and a half. They are the ones that are sitting a bit in the green at the moment. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, Haidi, what we've gotten in the past hour or so really about this ceasefire between Israel and Iran announced by the US president. So some uncertainty about the longevity of what we might actually see between the both sides. Will the ceasefire hold?
Potentially, and also what might happen before then, right? We're hearing of intercepted drones by the IDF. We're also hearing now reports of powerful explosions in western and central Tehran, according to reporting from RNNA. So we've still got a few hours to go before that purported midnight deadline for the ceasefire, Avril.
Yep. In the meantime, let's take a look at how markets in Japan are shaping up. Of course, overnight, the handover from Wall Street was positive, so that's trickling through into the Asia session. We're seeing Japanese stocks adding about 1%, and the yen also moving away from the greenback. It was roughly at that 146 level in the past session. Today, we're also keeping a close watch on the JGB auction for 20 years. Remember, the disastrous auction last month was what really sparked these fears about whether the Japanese bond market was able to absorb everything we're seeing on the long end. Also, those fiscal sustainability concerns. That the board take a look at what we're seeing in South Korea as well. That's really a market that has been driven by AI optimism and extension, I think, of the gains we're seeing in Korea for the moment. And the Korean won also erasing some of the weakness from the past couple of sessions against the greenback. Of course, keeping a close watch, Haidi, on where oil prices go from here. The geopolitical risk premium that's been baked in has kind of been reversed at the moment as these headlines come in.
Yeah, that fade very much obvious when it comes to the oil markets that we've been watching. And to be fair, this is a slump that started really in what was a volatile session on Monday that ultimately we did see end with some pretty steep losses. And those losses have really just consolidated going into the early part of the Asia session. Oil prices falling by as much as 6% this morning here in Asia after the announcement of that tentative ceasefire between Iran and Israel. So just further lowering crude's risk premium, I should say. Traders now looking at the narrative that the risk of a supply shock in the near term is at least now in the rear view mirror, with really not a great deal of talk in terms of the potential risk of blockades to the Strait of Hormuz as we get closer to this tentative ceasefire. Take a look at what we're watching when it comes to Australia. We've seen that recovery when it comes to the proxy risk currency aspect as well, with the recovery in the Aussie dollar. 64.79 is what we're trading at the moment, and it's the backdrop of the weakness now returning to the greenback. We're also seeing equities trading high by about 0.8%, a real pop in trading here in Sydney just in the first 2 minutes or so. One stock that we'll be watching when it makes its debut at midday Sydney time will be Virgin Australia to start trading after its relisting today. Treasury futures at the moment falling after we saw the announcement of that ceasefire, Avril.
Yeah, and we have some of these lines crossing the terminal as well when it comes to the ceasefire. Of course, these questions about how it will last, it hasn't kicked in yet, a couple of hours to go before they actually come into effect. But as to whether we're getting the Israeli and the Iranian buy-in to this, Trump is said to have spoken directly with Netanyahu on the ceasefire agreement, and he's also thanked the Qatar Emir for helping to broker the Israel-Iran truce. And of course, earlier reporting suggested that the Iranian side, the Iranian officials had agreed to the ceasefire. Let's get more on all these headlines and the market response after President Trump's announcement of that ceasefire. Our executive editor for Asia Markets, Paul Dobson, joins us now. Fast and furious, these headlines coming in. Maybe not surprising in the way that geopolitical risk premium quickly unraveled, but is this necessarily a risk-on situation we're seeing?
Yeah, morning, Avril. I think that you can definitely read it that way. Longer term, this should be a positive financial markets. If there is more stability in the Middle East and less of a threat from Iran on that nuclear side, then people can probably take that as a longer term positive. With the proviso, of course, that we don't know for sure that it's all going to work out that way. People will still be watching very carefully to see what Iran actually does, whether it follows through from that and whether there's any disruptions to those supplies of energy out of the Gulf region. But assuming not, then, as the Trump administration has been promising, we should be headed for lower oil prices. That should reduce some of the inflationary impact on US markets, which should, all things being equal, be seen as a positive. We heard from the Fed talking about the idea they would be able to start cutting interest rates later in the year if inflation does stay under control. falling oil prices would help towards that. There's also the tariff risk hanging over markets at some point that we'll come back to once this big hiccup kind of blows over. But for now, I think the markets can take it as a relatively positive sign and continue to extend those gains.
Some point we'll get back to the evergreen topics of consternation for these markets, right? But in the meantime, there are some aspects that become a little bit more challenging with this ceasefire and with the kind of calm being restored. One of them would be the dollar rally, and the other one would be how this JGB auction goes.
Yeah, so the JGB auction is going to be really interesting today. We saw all of those measures from both the BOJ and from the government toning down the supply of longer maturity bonds into the market. The BOJ sort of easing off on how quickly it's going to do its quantitative tightening, and then the government switching more supply to the shorter end of the curve. So that should give the market a little bit more hope that there won't be so much supply to take down, and therefore that there'll be a little bit more scarcity of the longer maturity bonds, which, all things being equal, ought to give them a little bit more encouragement to the buyers who still need to pick them up for their various portfolio needs. On the other hand, they have been under pressure. We haven't really found a clearing price that the market really likes for those longer maturity Japanese government bonds, especially from home buyers. International buyers seem a little bit more excited about them than the domestic market. So there will still be pressure on this auction, and its success will probably give us a good insight into how the market is going to treat those the back end of the Japanese yield curve from here.
Paul, wonder as well, I mean, when it comes to the trajectory, even if we see that sort of risk off in broader markets, equities-wise, what is the next driver going to be? I mean, earnings will still potentially be weighed down. We're going to have to watch for any tariff impact.
Yeah, I think so. Tariffs and the tax bill are two big things that people have still got their eyes on for US markets. Although near-term Treasury markets might take some respite from falls in oil prices, from the idea that the Fed's going to cut. On the flip side of that, you still got that big glut of supply. So again, similar to Japan, that concern about the long end of the yield curve. So that might start to show up again in markets at some point. And I think for the tariffs, it's going to be really interesting, right? And that comes back to our region as well. We saw a massive front loading of exports while people were able to get them done before the tariffs come in. We're getting close now to the deadline. Whether Trump will just wave through an extension, probably could say legitimately everybody's been negotiating in good faith and we've kind of been distracted by other things. But we'll come back to that in another 90 days. I think if you get that, then markets will be very happy as well.
Our executive editor for Asia Markets, Paul Dobson, with the latest on that market reaction. And certainly we're still a few hours out from that tentative ceasefire kicking in. And at the moment we're hearing reporting from Noor News saying that there are current blasts in Tehran, Karaj, are bigger than the last 12 days. This follows earlier reporting of some significant blasts being heard in central as well as western parts of Tehran. And now we're hearing that the current blasts in Tehran are bigger than what we've seen in the last 12 days. This as we continue to count down to that ceasefire. President Trump there also remarking that he's spoken directly with Benjamin Netanyahu on this ceasefire an agreement. Let's bring in for the latest our Bloomberg News Desk editor Jill Dasis. And Jill, even with the announcement of the ceasefire, that sort of exuberance and confidence that we saw in the Truce social post from the president, the fact that we've now reportedly had acknowledgement both from Israel and Iran, we're also still seeing, indications of conflict activity taking place before that ceasefire, not to mention the question as to, how solid this truce really is.
Yes, I mean, that headline that you're seeing on your screen right now, Haidi, that's coming from Iranian state news, obviously talking about the fact that, there's continues to be some conflict in the region. We're still about 4 hours away from when this ceasefire is purportedly due to take place. And, while it does seem like we've got some acknowledgements there, I'm still waiting to hear, sort of directly from Bibi Netanyahu in particular, the Israel side about, how exactly, Israel is going to be framing this ceasefire. I don't think that it's particular particularly surprising in the sense that the strikes that we saw earlier, we were all waiting over the last 24 hours or so for what Iran's response was going to be, what kind of measure of retaliatory effort they were going to take against these U.S. strikes from over the weekend. We ultimately saw that in the form of this strike on this U.S. command base in Qatar. But again, a lot of that strike, it seemed to be incredibly symbolic. I mean, they gave a heads up to the Americans to evacuate ahead of time. The Iranians even said they used the exact same number of missiles in that strike as they did over the weekend. Obviously, something that was very symbolic. Does this mean ultimately that tensions are cooling back down again? Maybe we're back in a position that we were in a couple of weeks ago, where we're back at the negotiating table, between these countries. We'll have to see. But yes, I mean, I think at this point, certainly we have this news of the ceasefire. I think we're going to have to wait to see whether that actually goes into effect, and then ultimately, what actions Iran or Israel are taking after that fact. Because again, as you're seeing with these headlines on your screen right now, there is still conflict at this very point in time.
Jill, I wonder, regardless of this ceasefire, how much leverage does Iran still hold, given how, the location of some of this enriched uranium, it's unable to verify where it actually is?
Yes, well, Avril, that's really the ultimate question here, and I think kind of plays into this question of, how do you take that and take, Iran's very measured response to the strikes from over the weekend? What does that mean about, what, Iran actually holds in terms of, its nuclear capacity? Obviously, Iran has repeatedly said that it's not working toward building a nuclear bomb. There's some independent analysis looking at the missile strikes from the U.S. over the weekend that suggests, did it actually do what the Americans intended? Had they moved, some of their materials out of that site ahead of time? I think those are all still very open questions. Obviously, you've got Trump saying, repeatedly in the aftermath of those strikes from over the weekend that nuclear site was, that site that he was referring to was totally obliterated. But I do think that remains an open question. Again, I think this all just points to the fact that there's still a lot that's happening here, a lot that we need to keep, in check. And I think, particularly over the next 4 hours, that's going to be really critical toward measuring how exactly we're building up to this purported ceasefire that Trump has announced.
Bloomberg News desk editor Jill Daces. We're also watching not just, of course, the oil markets, but oil stocks as well, which have taken a beating over the past few sessions, given the rise of risk premium that is now receding. But we're still seeing quite a bit of downside there when it comes to those trading here in Australia, with that energy off by 7.25% there. Santos also seeing some muted losses, as well as trading across some of the oil names in Japan as well.
Yeah, it's interesting, Heidi. I mean, it's almost as if the conflict, the uncertainty of the past week and a half didn't happen. Is this a reversion to mean? Certainly, we're seeing that in the price action, not only among these energy-related stocks down under, keeping an eye on some of these defense stocks as well, though they are at the moment trading pretty mixed. A couple of these counters in Japan and South Korea. More ahead on the Asia trade. This is Bloomberg.
Take a look at how benchmarks across the region are tracking. Broadly, risk is back on with the announcement of that ceasefire set to kick in at midnight. The New York Times is still about just under 4 hours or so away. We are seeing some gains there, particularly when it comes to that strength that we're seeing Korean stocks setting that fast pace. Japanese equities just trying to keep up a little bit at this point. Well, the World Economic Forum's annual gathering in China is getting underway today. The meeting of the new champions, as it's officially called, but of course we better know it as Summer Davos. Our Chief North Asia correspondent Stephen Engel is there at the event in Tianjin, as he always is every year. Steve?
Yes, I've been to almost every single one of these summer Davoses. They alternate between Dalian and Tianjin. This year we're in a brand new, the largest convention center I've ever seen in the world, a new one here in Tianjin. And we're joined, our first guest of the coverage this year is with Diana Choyleva, Enodo Economics chief economist. Thanks so much for your time. So much to talk about.
I know.
How are we going to fit it all in? Okay, so the Middle East. Obviously, China has a lot of geopolitical ties to the Middle East, in particular with Tehran, but economically they also import a lot of Iran's oil. So the fact that they haven't yet closed the Strait of Hormuz is a good thing. There seems to be off-ramps, but are we out of the woods yet?
We're not out of the woods, but as you said, not closing the Strait of Hormuz is critical, not just for Iranian oil, but of course the whole of Gulf oil. And it seems like Iran's response has been measured, something that they could at home present as a strong response, but maybe that allows for an off-ramp. But we don't know, and I think markets are being complacent.
Well, what would it mean, obviously, if this is just a pause in the tensions for the Chinese economy and the oil shock that could ensue? Because, again, 90% of the oil exports from Iran go to China. Obviously, about a third of China's imports go through the Strait of Hormuz. High oil shock, what does that mean to China's economic recovery, which is obviously tenuous at best?
Yes, but China here is suffering with deflation, not inflation. So that shock necessarily is not as bad. But it is that it's this compound effect of the shocks that builds up, which I worry about. And geopolitically as well as economically, because while China's economy has been fairly strong in the first half of the year, and the authorities have managed to stabilize it, we had the explosion of the trade war since you and I last saw each other at the Boao Forum, and that's created a lot of uncertainty globally. There is the potential for a deal, but that deal is unlikely to be a grand bargain. So.
Right, so you're not too optimistic that we can reach a lasting truce by the White House imposed deadline of mid-August?
No. Not lasting truce, but a truce that could potentially last over the course of this year, because China has assumed a much more aggressive and tough stance, and so far the US has blinked, and China is smelling, if you'd like, blood in the water and pushing it further. We're going to see, we still don't know exactly what will be included in the deal and the agreements that were reached in Geneva and London. But my worry is whether China pushes that advantage too much, and then the U.S. responds in one of the other domains, because the China-U.S. rivalry is across the trade front, the tech front, and the Taiwan front.
So you think, and I've seen some of your posts, that Xi Jinping has played it pretty masterfully so far. But the narrative we're getting out of Washington, which is much more vociferous than what we're getting out of the piecemeal approach from Beijing, is that if Beijing relaxes its export curbs on rare earth, then the United States would, in turn, after that, relax its more recent export curbs on some tech products. That sort of implies to Beijing that we have to move first in order to get a lasting truce.
Yes, but I mean, ideologically, there is a huge clash. So what does a lasting truce? Neither side is going to give the geopolitical space to the other. Right. So, that type of grand bargain is impossible. And so what is a lasting truce? I mean, I don't know if you noticed, but the budget for the Department of Commerce, BIS, Bureau of Industry and Security, just got doubled. Yeah. And they're going to hire, this is after Doge, and they're going to hire a lot of people. That doesn't give me the impression that the U.S. has an intention to slow down on its tech containment of China. Meanwhile, China has found really powerful short-term strong card in critical minerals, as well as in just sort of stopping the ships and creating empty shelves in the U.S., whereas the type of measures that the U.S. can employ are much more with longer-term impact or very escalatory.
Right.
And so the U.S., from a shorter-term perspective, is finding itself of having to yield ground.
You're going to be on a panel tomorrow about currencies. And obviously, Pan Gongsheng of the PBOC last week at the Liu Jiazui Forum made again an appeal for the internationalization of the renminbi. It's not an open capital account. The currency is not freely traded. So there are these inherent, obviously, issues. But they can rely more on having bilateral trade settlement deals in the yuan, which they have done through their own clearing system, CIPS. But what do you make of what China is trying to do, basically accelerate the de-dollarization and make the renminbi a little bit more internationalized?
They're so focused on ensuring that they are not dependent on the dollar-based global financial system and payment system, because that's one of the cards that the U.S. can play. And you're right, they've created their own payment systems called SIPs, but that's still very expensive.
Yeah.
However, there is real promise with using central bank digital currencies for cross-border payments.
Yeah.
That will revolutionize the cross-border payment.
Well, the digital renminbi, and he even talked about exploring and maybe using Hong Kong stablecoins as well.
Well, my argument would be, I'm arguing to the U.S. that their choice of stable coins and banning central bank digital currencies is the wrong one, because at the end of the day, the most energy efficient way is with central bank digital currencies. And we all know what a huge pressure there will be on energy resources when it comes to data centers, et cetera, et cetera.
Yeah.
So not to mention from a monetary policy perspective and sort of how that will change if you move in the direction of using stable coins and the innovation that distributed ledger technology has brought in that way, rather than in using that through the central bank digital currency. And one of the arguments I talked to the US about is that you don't have to have a central bank digital currency internally to use it externally for cross-border payments.
I need to come see your panel tomorrow, I think 5 p.m. On currencies. And you also had an interesting post through the Asia Society about there's growing chatter that the Hong Kong perhaps is going towards scrapping the dollar peg. There's too little time left in this conversation to talk about that.
They won't.
They won't. I know.
Won't.
Paul Chan saying there's no chance. They won't do it. But there is growing chatter of the possibility. Diana, thanks so much for your time on Bloomberg TV.
Lovely to be with you.
Okay. Avril and Haidi, back to you guys. From Tianjin, not Dalian.
Thanks so much, Steve Engel in Tianjin for us. And of course, we have more lined up for you from the World Economic Forum in Tianjin, JD.com's chief economist and the Standard Bank Group chairman joining us in the next hour. More ahead on Bloomberg. Keep it here with us.
Take a look at what we're watching as we're just a few hours out from the declared ceasefire by President Trump between Iran and Israel. In the meantime, though, there's plenty of conflict activity still happening. Iran is deflecting the, quote, most intense strikes since June 13th, according to state television reporting. We had earlier reporting about current blasts in Tehran being bigger than the last 12 days. That also coming from state media as well. For central and western Tehran, we're now hearing that the level of activity that we're seeing, particularly when it comes to the most intense strikes being deflected since June 13th, according to state television. So this, as we count down to that midnight New York time ceasefire between Iran and Israel that was declared by President Trump, we have had acknowledgement from reports from both sides. Take a look at the sort of interplay when we see some of the havens versus risk assets playing out at the moment. Gold, for example, that Heyman demand ebbing, the risk premium coming down when it comes to crude as well, and a bit of a reversal when it comes to the US dollar. This is Bloomberg.
Even as we track these geopolitical developments out of the Middle East, the focus is also on the path of the Federal Reserve. Former Fed Vice Chair Richard Clarida says while there is a risk of stagflation in the U.S., it's unlikely to be as bad as historical shocks such as the ones in the 1970s. Clarida, who is MD and Global Economic Advisor at Pimco, discusses the outlook for inflation amid the latest geopolitical risks.
There's always an element of geopolitical risk in the world. You really can't go into the bunker and hide from it. You just have to adapt to it. And I think this is an example of that. You know, markets will try to look through and assess the fundamentals. I don't think you can get too caught up in the day-to-day volatility in times like this.
But do you worry, I mean, do you support, you know, the Fed has an idea that actually in the third quarter inflation is going to pick up. But there's always this mismatch between surveys and actually translating into the real data. Will it come to fruition?
You know, we really don't know. So far, year to date, the inflation data in the U.S. has been coming in better than expected. Indeed, as of May, essentially inflation is running at the Fed's target. And so the Fed keeps waiting for the tariff impact to show up in inflation. That's in their forecast. That's in most other forecasts. But I think, honestly, we have to admit so far the U.S. inflation data has been coming in pretty favorably. Yeah.
Does that, I mean, the big worry is, of course, stagflation.
Yeah.
Right. I mean, we don't even pronounce it on a Monday morning in case something comes back. Do you worry about stagflation in the U.S.?
I think it's a risk. Now, if we do get a stagflation, it's not going to be the bad old days of the 70s with 10% inflation and bell bottoms and 12% unemployment, but we'll have a whiff, potentially a whiff of stagflation. Governor Waller recently of the Fed has indicated that he's prepared, and probably others on the committee, to really look through that if the economy's underlying fundamentals look sound. So an interesting next couple of meetings for the Fed, I think.
Pimco Managing Director and former Fed Vice Chair Richard Clarida, they're speaking with Bloomberg's Francine Lacroix about the whiff of stagflation risk. Some stories we're following in the meantime, and the Supreme Court has lifted a judge's order requiring the US government to give people 10 days notice before they're deported to a third country. It is a win for President Trump, whose administration argued that a Massachusetts court usurped presidential authority. The case stems from a lawsuit in March by immigrants who feared being removed to countries not identified in their deportation orders. China has moved to tighten controls over two chemicals that can be used to make fentanyl. The move is seen as an olive branch to the US that may help maintain the fragile trade truce between the two countries. Trade talks this month saw a suspension of the highest US tariffs on China, but a 20% levy tied to fentanyl remains in place. We've been told that China has introduced a requirement for state-owned developers to avoid defaulting on publicly issued debt. It is the latest attempt by authorities to contain the nation's prolonged property crisis. The directive may place pressure on management while also sending a signal to banks, often responsible for rolling over loans and issuing new credit. Japan's biggest banks are considering evacuating employees and their families from financial hubs in the Middle East due to increased risks in the region. MUFG, Mizuho and SMFG are taking measures including halting unnecessary travel and urging employees to exercise caution. The UAE, Saudi Arabia and Qatar have been attempting to attract global financial firms to help diversify their economies away from fossil fuels.
Yeah, Heidi, let's check in as well on how futures in Europe are opening. Stocks 50 futures pointing to that upside at the start of cash trading, really the geopolitical backdrop now that we're hearing from the U.S. president about a ceasefire that will kick in between Iran and Israel a couple of hours from now. Of course, the subtext in all of this was how the Europeans are energy importers, more or less. But let's talk about these broader geopolitical developments and specific to what it comes to the UK. Joining us now is Peter Kyle, the UK Secretary for Science, Innovation and Technology. Really good to have you with us in the studio.
Great to be here.
We'd like to talk about the geopolitical backdrop first and foremost. I mean, the ceasefire that's set to come in a few hours from now may be taking a bit of the edge off, but the risks remain, and the UK is a key ally. To what extent should we be worried about retaliation from Iran on the UK or the UK's assets?
Well, the key thing is that we are now moving towards a period of de-escalation. The fact that the US is now de-escalating, that they are moving towards a temporary ceasefire, which we hope can provide the space for a permanent ceasefire, is a very important sign. So it is important that Iran responds accordingly. They have an opportunity now to move towards a de-escalation. That's what Britain has been calling for some time now. We have that opportunity, and all parties should grab it with both hands.
What about some of the risks, though? Because Iran is still seen as having a bit of leverage in the conflict, especially when it comes to enriched uranium. There is a chance that it resumes some of its nuclear ambitions. And as the conflict kind of unfolds, even as we hope for de-escalation, maybe in your portfolio as tech minister, what are we seeing when it comes to Iran and cyber activity? Have you seen an uptick in that?
Well, Iran has always been against the US and had an offensive cyber policy. We have been victim to cyber attacks persistently from Iran. That is not unusual. It's something that we have adapted to for quite some time now. When it comes to the nuclear threat, Britain and our allies have been very clear that it is not tolerable for Iran to have nuclear weapons. But the key thing is that we have now a period where we have de-escalation in the area. I urge Iran to use this opportunity, and it is an extraordinary opportunity that is now before them, to de-escalate and return to a political process. The period of time that was best for Iran and was best for our allied countries and the United Kingdom was that period where we had a diplomatic solution to the nuclear challenge that faced both of our countries with regards to the potential armament of Iran. We have this opportunity now to move towards a political solution again. They should grab it. They shouldn't turn their backs on it.
How much influence would you say the UK has in advocating for this diplomatic solution? Because I think Keir Starmer, the Prime Minister, also left the G7 with the impression that the US would not be involved militarily, yet days after we saw what happened. Does the UK perhaps feel blindsided by this? And, you know, how much sway does it still have in the process?
In a period leading up to the kind of events that we've seen all leaders, including President Trump, use rhetoric very wisely. So let's just focus on what action has happened, and let's focus on this moment in time where we have some absolute categoric facts. The facts are there has been a moment of military escalation. We're now in a period of de-escalation. That needs to be grabbed with both hands by all parties to move towards a political solution. That is the only way that we will deliver peace for the region. And that peace has a purpose, because on the back of that peace we can then start building the kind of economic prosperity that all parts of the Middle East is so desperate for.
Secretary, the truth is, though, the reality is that those facts move very quickly. The reality changes very quickly under the style of leadership that we've come to expect from President Trump. And I do wonder, and I think this probably goes to Avril's question, do you have to change the way that the UK government sort of strategizes and implements policy, given how unpredictable the external environment can be? The case in point would be that European leaders were planning to sort of have their own approach to a diplomatic approach when, of course, the US acted over the weekend.
Well, of course, Britain and our European allies were working very closely with the United States. Don't forget the United States had representatives in the area as well, also engaging with Iran. We tried very hard to have a diplomatic solution to this, and of course the US did too. But look at how Keir Starmer as Prime Minister has acted since he became Prime Minister. Acting steadfastly, working with our international allies, building strong relationships. Don't forget there was a whole period of elections over the course of the last year, including Australia, and we need to move forward from that. Now, we've had a whole set of opportunities because of lots of new administrations forming around our world with our allied countries, including the European Commission. Keir Starmer has been insistent on a reset with the United States, a reset with our European allies, the European Union. And you've seen that being used to deliver for Britain and, of course, through our allies for their countries too. So you see that in another form just this week when we've announced our industrial strategy for Britain, where we are lowering energy prices, lowering the regulations on planning so we can expedite planning and investment into Britain, which is why I'm here in Singapore to celebrate 60 years of diplomatic relationships with Singapore, but also propelling ourselves forward with new opportunities for investment between the two countries. This is all because we're talking about a decade of national renewal. We have set a long-term strategy for Britain, for our economy, for our society, and certainly when it comes to science and innovation and our embracement of digital technology. So this provides a great platform for building stability into Britain, but also with our international allies and investors into Britain. That is what is really delivering for Britain. And you'll see that we've struck 3 trade deals just in the 11 months that we've been in office. This shows a strategic, long-term approach to managing our country. And I think it stands us in very good stead, not just with the United States, but our other international allies too.
Yeah, that's really why
How
you're
important are those multilateral trade
Peter?
deals and investment environment, given the uncertainty in terms of that trade relationship with the US over steel tariffs, for example? Do you think that that sort of good faith has been restored with that relationship yet?
What you've seen is a steadfast relationship that is delivering for both territories. You know, America has a great trading relationship with Britain. It's in both of our interests to strengthen that relationship and try and add a kind of foundation that can be stood on into the long term. You know, I'm proud that Britain, under Keir Starmer's leadership, has been the first to strike that trade deal with the United States since Donald Trump came in. That has lowered the tariffs that were imposed, and now we're talking very steadfastly about how we can build on that into the future. America has a trade surplus with the United Kingdom. We have a great trading relationship. Our economies are intertwined in many ways. But the great thing that I expect and hope people will look at when they see Britain today is that if you look at the high growth sectors in the global economy, from space to AI to automation to drone to health tech and climate tech, Britain, because we have 4 of the top 10 universities in the world, we have the English language, we have a culture of scientific endeavour that goes back decades and, yes, centuries too. It stands us in very good stead to innovate our way to the future. We need to make sure that we are rooted as an economy in those high growth sectors into the future, where the jobs and the wealth will flow from the innovation in these areas. And we are open to business. We have an industrial strategy that makes it much easier for people who want to invest and who have high skills to come and invest and live and work and create the businesses and jobs of the future. And I hope people will look at us and see that we are a great partner as a country now.
Secretary, thank you so much for coming in and sharing these industrial strategy plans of the UK. Peter Kyle, UK Secretary of State, Department for Science, Innovation and Technology. More ahead on the Asia trade, this is Bloomberg.
Big oil giants from the Middle East are investing heavily in global LNG production. Abu Dhabi's state-owned ADNOC has put in a $19 billion offer on the table for Australia's second-largest gas producer, Santos. If it goes through, this will be the largest ever cash offer in Australia's corporate history. And LNG has become one of the world's hottest commodities, driven by fast growth, sustained demand as a transition fuel backing up renewables. Let's bring in for some insights Rick Wilkinson, who's the CEO of Australian-based energy advisory firm EnergyQuest. He's also a former Santos executive. Rick, really great to have you with us. And, of course, the timing of all this sort of coincided with the conflict ongoing still in the Middle East. How much does the geopolitical uncertainty and instability in the region has to do with how much outreach we're seeing from energy giants in that part of the world to places like Australia for assets?
Well, I think we are going to see, and we already are seeing, interest from the Middle East as they spread the global outlook of the company. So we've seen that with ADNOC, and we're also seeing it with Aramco in Saudi Arabia. So it's a very natural, once you get to a certain critical mass, that you look to take some of the global instability out of the portfolio.
Does external or sort of removed LNG assets remove that choke point risk for the Middle East players?
Certainly it does. Australia is the second largest LNG exporter, so having a portfolio like you have for Santos, which has LNG not just in Australia but also in PNG, with a great line of sight to the Asian markets that are emerging. So it's a great fit for someone who's actually stepping into a more global LNG portfolio.
How does this play out when it comes to FIRB, which of course has a pretty big history of blocking takeover bids from state-owned entities, particularly if we're looking at, a part of the world that has so much political and potentially governance volatility at the moment?
Yes, that's the important step when you make an investment in Australia, the Foreign Investment Review Board, which ultimately reports to the Treasurer. So while it's an analytical report, it also plays into the political arena as well. And so top of mind will be infrastructure and energy security for the country. So those are extremely important things to consider. When you look at Santos itself, it doesn't look like it's that big. It's only about 3% of Australia's production when you account for all of the LNG production that's available. But on a domestic gas side, it's much more important. It's 7 to 8% of the East Coast and as much as 20% on the West Coast. Most of those producing assets are extremely mature, late life. They're hard to add to, expand. And so what the government, what the FIRB will be liking to see that the move of ADNOC into Australia will make sure that those assets are properly produced out and, of course, abandoned and taken care of from an environmental point of view. But secondly, the investment necessary for new gas to come on. And Santos's portfolio extends up to the Northern Territory where they have shale gas potential. And then there's other plays that might be possible around the Cooper Basin, such as Deeper Coals, Granite Wash, that are going to bring on gas to replace those declining fields.
Rick, I just wanted to quickly ask you, as Haidi was kind of alluding to in the earlier point, how much do you think Australia energy producers are going to be capitalizing on, the need for diversification globally when it comes to supplies? Is there a sense of a level that we can expect more production?
Well, that's going to be a balance off, of course, of how much support comes from the government to expand and move into those areas. As you know, we all have quite aggressive net zero carbon targets. So there's mixed signals that come, particularly from the southeast corner of Australia, where they're very aggressively chasing net zero targets and transitioning to renewables. So the ability for Australia to expand and step into and meet that new demand potentially for gas or even oil from the Middle East and give that diversity is somewhat limited. So it's going to be a slow game. I don't see Australian LNG making great expansion in the near term. It'll be producing out assets and more brownfield expansion where they're adding on fields to existing LNG structures. An example of that is Darwin LNG, where the Barossa field is a backfill into Bayu-Undan, and they're looking at Scarborough coming into the Northwest Shelf. The only potential long-term LNG expansion is Browse, so somewhat limited as to how quickly we could step into any great movement.
Rick, really great to have you with us. Rick Wilkinson, CEO of EnergyQuest, as we take a look at the appeal of Australian energy assets given the Middle East conflict. And to that point, there's still a great deal of volatility, even just a few hours out from this tentative ceasefire kicking in. We're hearing now from Iran's Minister Araghchi commenting on a ceasefire in a post on Next, saying that as of now, there's been no, quote, agreement on any ceasefire. The final decision on military operations will be made later. So a pretty key point of disagreement, given that we had Donald Trump saying that a tentative ceasefire between Iran and Israel had been agreed to kick in at midnight time, New York. That's just about 3 or so hours away. Iran now saying that from the foreign minister there on X, saying that as Iran has repeatedly made clear, Israel launched the war on Iran, not the other other way around. And as of now, that there has been no final decision, no agreement when it comes to any ceasefire or cessation of military operations. However, provided that the Israeli regime stops its illegal aggression against the Iranian people no later than 4 a.m. Tehran time, they have no intention to continue their response afterwards. A final decision on the cessation of military ops will be made later. This as we continue to hear reporting of further conflict activities in Tehran. More ahead on the Asia trade. This is Bloomberg. Just some breaking news crossing the Bloomberg and posting on X, the Iranian foreign minister saying that as of now, there has been no agreement on any ceasefire or cessation of military operations, saying that provided that Israel stops its, quote, illegal aggression against the Iranian people no later than 4 a.m. at Tehran time, they have no intention to continue their response afterwards, but that the final decision on the cessation of military operations would be made later. We've been looking at reports of more military operations, including Iran deflecting the most intense strikes since June 13th, according to local television media. Well, it is a fraught time for the aviation sector and airlines, as we've seen by how stocks have been trading over the past few days. And Virgin Australia is relisting in Sydney today, more than 4 years after filing for bankruptcy during the COVID-19 pandemic. The airline is returning to public markets at a pretty traumatic time. Paul Allen has latest. Well, depending on how this ceasefire plays out, we don't know at this point. It could either be a good day or a bad day for the airline.
It couldn't. It's fascinating, isn't it? Virgin just seemingly at the mercy of these exogenous events, going into administration during COVID, coming back into this environment as well. So it's been an administration for 4.5 years. Bain Capital bought it. Fuel prices, obviously going to be a question for Virgin going forward. It is hedged for this year and most of next year as well. But the timing's just unfortunate. This has been in the making for nearly 2 years if we follow through the filings. Bain Capital's going to keep a 40% stake. It's selling a large chunk. Qatar Air owns a 25% stake. So about 30% of Virgin's going up for offer today, $2.90 per share. Values the company at about 2.3 billion Aussie dollars. That's 1.5 billion US, and about 7 times earnings to the year ending June 2025. So yeah, is it good timing? Well, if we step back, the ASX up 15% from its April low. Qantas, its main competitor, up 12% year to date. So it could work out okay. We're going to find out. Shares start trading at midday.
Bloomberg's Paul Allen there. We've still got a few hours away, of course, both in terms of those shares starting to trade as well as this keenly watched ceasefire if it kicks in. We have heard from the Iranian foreign minister saying that there's no intention to continue their response if Israel stops. At this point, he says there is no agreement when it comes to a ceasefire or cessation of military operations. Watching the market reaction, which has been largely positive when it comes to risk assets, and that continued sell-off that we see in crude markets. This is Bloomberg.